GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of this weekly webinar. So we're covering the major forex pairs and we're covering some commodities and indices and a bit of crypto. Any extra markets you'd like us to cover, please drop a comment in the video and be happy to go over them. Any extra things you had in mind, different strategies, happy to discuss them. If you're enjoying the video, please click the like button, it really helps. But otherwise, without further ado, I'll get right into it. Let's start with the currency pairs, and actually the dollar's been on the move recently, so that makes it interesting. Obviously, at the end of last week, we had the news that Donald Trump had caught the coronavirus, and so he's as we speak, he's in hospital. But actually, there was a move into the dollar as a haven, but almost the entirety of that move is being unwound as we speak today. It was a pretty limited move up in the dollar, and I think actually it's almost a signal in itself that we had some quite it's quite mad news. The president has the coronavirus and all the implications for his health that might have, and what that means for the for US politics, the related uncertainty, etc. It was just a very limited move up in the dollar, and it suggests that actually there's some underlying buying interest in these other currencies like the euro that I have on the screen here. So here you can see we've been in this tight consolidation pattern above 117. We're basically between 117 and 117.50, and it looks to me, and so you can see, and this I mentioned this last week, this previous support is likely to be resistance. It was resistance at 117.50, and it looks like we're pushing up in this pair, and that's not a surprise because such sort of for the euro dollar pair, it was quite dramatically negative news. You'd expect people to jump into a haven currency like the dollar, but they did only in a very limited way, and actually you can see on this little tail on the daily candlestick that some buying came in on Friday at the end of the day in the euro, and as of today we're pushing up and we're unwinding those moves. And so the point being, if we get a limited reaction to the downside on quite significantly bad news, it shows there's some underlying positive sentiment in the market and it's a bullish signal. And so what it looks like is setting up here to me is a break of 117.50 and a push higher. Now this is the daily chart. From the 4-hour chart, you can see it's a slightly more bearish looking setup. We had quite a big pullback from the 120 level, but now we're up and above the we had this rally off the low. We held 117 on 2 occasions, and here we're up on this potential break of 117.50 that I'm talking about. If we do have another leg lower from this big correction here, I think probably it happens around 118 because that's also the 50% retracement, or potentially we push a bit further and you can see that the 61.8% retracement of this whole move down from 120 comes in around these previous peaks, and then we've got 119 above. So there's still a few layers of resistance to get through. And why might this price sell off again from there? Well, look at this. We've broken this rising trend line. We have moved below the daily 50-day moving average. So there's been a break of pattern, there's been a break of trend, and that's not to say we're about to turn into a big downtrend, but at least we're moving into a more sideways period, and so that's a reason to think that maybe one of these levels above, if we start to see some confirmation, bit of a sell-off from the 50%, the 61, or indeed 119, then that would be something to watch, because we're not in such a raging bullish scenario after the break of the trend line and the moving average. But short term, potentially in the duration of this week, it looks like we could get a bit of a push higher in these currency pairs, and you'll see that's been validated from some of the other FX pairs, the way they're trading as well. And let's have a look at those now. So now we're on to the British pound. This is the 4-hour chart, and you can see that we stabilized with several tests of 127 couldn't get through it, broke up through the short-term moving average, stabilized, held it, and we've been rolling up above it ever since. And this again fits in with the same characteristic of this was even more extreme because we obviously have Brexit to contend with the pound, and actually we got some news late last week that there might be some sort of compromise to be had on fisheries and state aid regulations, some of the sticking points that have been stopping a deal being done so far. You know, it's Boris Johnson has a deadline in place of the 15th of October, which I believe is next Thursday. Yep. So, you know, we've got just over a couple of weeks, just under a couple of weeks to get a deal done, and there's a little bit of optimism in the pound. And so you can see this was the dollar sell-off on Friday, but we pretty much got some pound strength right back again and closed right to the highs. And again, this looks like another scenario where it looks like we're breaking to the top side, breaking above this declining trend line, having already broken the short-term moving average, and it looks like we're going to get a pop through 130, which is obviously a psychological level. And then you can see that in a bit more detail here, where actually we're getting some positive, some bullish divergence on the RSI as well. Look at that. So higher high made on the RSI, lower low made in the price. Now it looks like we're getting the break to the top side. So again, similar situation in that there is some resistance on the way up. So I'd point to this kind of golden zone between 50 and 61.8, and it's also that consolidation period before we made the drop. But it looks to me like we're setting up for a bit of a bullish run here. So basically it's not been quite as clear cut as the euro, but basically this period of being well above the 50-day moving average, that ended. We dropped through the moving average, but the uptrend is not over yet. And I believe there's even I don't think it works perfectly, but you can see that we basically held on to this, roughly speaking, this trend line here. So the trend slowed down a bit basically. We had a bigger correction, but it looks like we're pushing up to the top side. We could of course roll over again somewhere closer to the previous high, with the idea that the uptrend has lost strength and we may be turning into kind of range bound trading. But it looks like the kind of downside momentum is taking a pause, at least for now. So it's downside moves in FX in the major currencies, taking a pause, and you'll see similar in terms of the kind of risk on, risk off of what that typically means. Similar things going on in the stock markets too. So dollar yen, we obviously got the dollar as the base currency, so this one's pushing to the top side and actually looking quite neat on this daily chart. We talked last week about the possibility of a double bottom at 104. Looks like that is starting to materialize. We got a drop down, a test of 105. Again, that was that because the yen is considered more of a haven than the dollar. It was the yen that strengthened on Friday on that news about Trump, but we actually got a close back above that, and now I haven't moved this level. That's how I drew it in last week. You can see we've got a neat close in right above there, and it looks to me like we're about to break finally this declining middle of the range trend line. And given that it's been resistance for so long, I think we probably don't hang around, and I think we can get a pretty decent move up to 107 fairly quickly. Just by judging, the reason I say that is that we've been holding below the trend line for so long. Now we finally break. If we do, I think we could go pretty quick. And then there's a combination of a confluence of resistance at 107, the round number, which is also these two peaks, and it's also where this big long-term declining trend line comes into. So maybe up there, not necessarily an area to sell, although it could be. But at least an area to manage your profits if you are long the dollar yen pair. Moving over to the Aussie, so it's a very similar scenario to the euro in that we've broken through the 50-day moving average, also broken below this kind of pivot internal line that we had drawn in, and I think that potentially could be resistance on the way up. But again, I think we are going to get another little layup, another little move up, because here is our double bottom down here at the 70 mark, which we mentioned. I don't know if it was in a webinar, but it was in one of the team's daily notes, I believe. And then we rallied up to 72, pulled back to the previous high, and we're pushing off again. So this is characteristic of a decent uptrending move, where we're not even pulling back to the low, we're actually pulling back to the high and stabilizing from there. So it, again, in line with the other idea that the euro and the pound are pushing higher. I think we're on course for a break of 0.72 and a retest of this broken trend line, which maybe is more like this, and that takes us somewhere a bit under 0.73. 0.73 is up here, and then if you remember, that was where we took the I mentioned that we used this as the line to consider rather than these two highs, and actually that was where that because the 72 level and the 61.8 lined up so well, we used that as the peak, and these is the kind of false breakouts, and you can see that's where this big drop actually started, was this peak back here. We used that, and yeah, that confluence, other people noticed that, or the market noticed it, and we did pull back from there. But had you sold at 0.72, wouldn't necessarily been a most amazing trade, and it looks like, unless you had just a 50 pip profit target, if you've been targeting the previous low down here, more like 71 for 100 pips, it looks like the trade's probably not going to pan out. And if you are selling somewhere in this region, it's getting to the point, if you had sold at 0.72 last week, it's getting to the stage where you're just going to have to cut the trade out at a depending on how you're managing the risk and how far you're willing to let the price move above the high, but it's getting to the stage where you just cut the trade out as a as a flat one, no win, no loss, but still much better than a loss, and sets you up potentially for a move up with the break higher, and potentially reinitiating a short at a higher price. Let's move on to gold, and so I've slightly changed what I did last week. So if you remember last week, what I had was basically this horizontal line in here, which I've still got, and that would have brought us a drop down to 117. Well, in line with the idea that I think the dollar is weakening a little bit, and that the other currencies are moving higher, I think gold can move a bit higher too here, probably through this, these two lows here are support, and it's right now it's a resistance to the price, and obviously, yeah, a little short-term trade short here would have been very good on that very simple idea of support turns to resistance. But I think it is actually about to break, but maybe we got the confluence of the 50-day moving average and this broken rising trend line, which kind of arguably was part of a kind of triangle pattern here. If we test that area above, maybe that's where we get the drop, and that could be a big leg lower from up near sort of almost 1950 down towards 1740 and change. Would obviously be, that'd be like $110 move, potentially with fairly, if you're looking at if we do get some kind of idea that the trade is rolling over here, what's your risk on these trades? Looking at these previous highs over here, if we get above these highs, 1970 up to 1990, and then definitely 2000, I think when we get up through those levels, then we're looking quite bullish at that stage. You probably don't want to be in a trade that's short the market, but while we stay below those, relatively big risk to reward if we've got a potential break of a triangle pattern, retest from up a little bit higher, and a drop again. So keep that potential scenario in mind, a potentially decent risk to reward short situation on gold, which is obviously naturally a bit of a long dollar position, which could work out from the current area, but it looks like we're going to get a break to a higher price. Okay, now we're on the 4-hour chart for WTI Crude, and So I said last week that we basically, when we held the webinar, we were stuck in the middle of the trading range, and I said that's not normally a good place to place a trade. Normally the optimum places in a trading range are at the bottom and the top of the range. Well, we did drop to the bottom. We never got to the top again, which is an interesting sign. So we tested the bottom of the range, which became the range from this previous low over here, rallied up off there, but couldn't get back above the 50-day moving average. That was the resistance, as was the 40 level of sorts, and we were back down and retested the bottom of the range again, and on a short-term basis we got a nice little bounce off the bottom of the range. So with the same very concept that we had last week of waiting for the better risk to reward opportunities at the top and the bottom of the range rather than trying to trade in the middle. That said, given the fact that we on the daily chart, you can see it better, that we weren't able to push up to the top of the range, that does show weakness. And if we're talking about a change of trend here, uptrend, slows down, breaks the moving average, rallies up, can't break the moving average, was support, now it's resistance, come down, test old support, move up again to the moving average potentially, or even just a short-term area of previous support that was broken, potentially that's where we roll over again from. So if you are a bit bearish oil, then actually the area to look for some reversal would be here, because this is where we found support initially, rallied up, held above it, but now we're back through it again, and so logically we can't get back above it easily, because this is a kind of pivotal area, this 37.50 through 39 really, 38.50 through 39, so kind of 50-cent range through here potentially, even though it's exactly what I was saying not to do, which is trade in the middle of the range, given the context of the fact that we couldn't, here's that space at the top of the range we kind of rolled over from. Maybe the price is showing us that it's ready to break lower. Okay, let's move swiftly on to Bitcoin. Not a lot happened really since last week. We looks like we just kind of developed into a kind of triangle consolidation pattern. We've held that was the previous support, and we'd drawn that in. It already worked as resistance once. We couldn't get up there a second time last week. We're in very kind of tight range days, and we've put in higher lows, but we've also put in lower highs. So not really going one way or the other. I don't think it's particularly clear which way this market goes. It's pretty much, I think if it's shown itself to be a bit of a risk asset, so I think if stocks break higher and the euro and these other currencies break higher, like I've been suggesting they probably could, then I think probably Bitcoin breaks higher too, and probably about time that it breaks this support turn resistance, and that would suggest a retest of 12,000. And if we can get up there, there's no reason to say we can't push above it as well. But if I were to hazard a guess, if euro and the S&P etc. are all breaking higher, I would suggest this triangle probably does break out to the top side and give us an opportunity up to 12,000. From there it's less certain. In those other currency pairs I was talking about, a potential short opportunity at higher prices, again that could be the same thing at Bitcoin, which if you remember this is quite a big level where we kind of stalled out on previous occasions in 2019. We couldn't get any real decent closes above 12,000, and again this last time. But equally 10,000 was big resistance, and we're holding it and we're pushing higher from it, so actually we could be setting up for a break up to last year's peak, if for the fact that we've broken above 10k, we've consolidated, held it, managed to go up to 12k again, break that, and then happy days up to 13,800. So it's open scenario here, but I think actually pretty pivotal for Bitcoin either way. We could get some decent moves once we get out of this consolidation phase above 10,000. Last but not least, we've got the stock market. similar thing, and that this was our previous area of resistance and then a kind of pivotal area before we made that big July-August rally. And we kind of, what's basically happened is we went a bit mad in July and August, went up almost every day, in a kind of very risk-on, low volatility manner, and then we had this kind of high volatility sell-off. We kind of took out all that excess from the market, and people have bought the dip. And as it is, we're challenging the 50-day moving average and this declining trend line. And it looks like that we've had this high volatility decline. We can see there's lots of big ups and downs, but we've stabilized. We've basically found support 3 times at around 3,230. That pretty much was the low, rallied above the short-term moving average and actually held it pretty neatly twice. I mean, these short-term moving averages don't always work, but on this occasion it's worked pretty neatly to define the push higher. And I'll just be watching this declining trend line. Once we get above there, it tells me that we're probably pushing up for a retest of the old highs. At least of this big long-term trend line, which doesn't look like it's drawn correctly there, but it depends how you draw it. But anyway, a retest of the old high I think is on the cards if we break this declining trend line here. Okay, I'm going to call that a day. Thank you very much for watching, everyone. Good luck trading this week. See you at the same time next week.